global rates are going up.
Yes.
Now, does this mean that the RBI has to respond, in step, right? That's the question that, typically we get concerned about when it's a secular global rate cycle.
Rise in yields, correct.
But I think they'd probably choose to, hold out as much as they can. I'm not saying that rate hikes are not there on the cards. They can afford to push it out.
Okay.
If previously as in say a month ago, we were worried that rate hikes could happen as early as middle of the year, as in middle of the fiscal year, we can probably say it's probably pushed out by a quarter or two.
So that means that rates are going up for sure. Probably not now, probably maybe mid of say the next calendar year.
I would say that the rate hikes are probably getting pushed back. The quantum of the rate hikes probably also has
come down.
Come up for a more positive kind of a view.
Okay.
If one was fearing that it could be a longer
the expectation
cycle,
earlier.
You probably are saying that it could be lower.
Okay.
So therefore, both of these seem to have changed at the margin.
For the better.
For the better. On the global policy and the rupee linkages.
The rupee yes.
Clearly, I think since last October, if I remember right, I think the rupee has been under serious pressure. And then with these measures, the FCNRB and ECB and all of those, we've bought ourselves some temporary relief. And I say temporary because these are not very long-term measures. We've just used these measures to replenish our reserves in the near term. If we indeed need to be stable and strong on the BOP side, we have to attract long-term capital, which is the foreign direct investment route.
The FDI route.
Yeah. So until we get ourselves to, putting in place measures that will attract FDI and sustainably so in the future, it has just bought us some time. The FCNRB measures. Now that said, where the rupee is today, if you were to just this is a measure that is very widely spoken about, the REER, which is the real effective exchange rate, which means that you trade with several countries, right? And there is inflation there in every country, and we also have our own inflation. We have our interest rate, they have their interest rate. So adjusting the interest rate and inflation differentials between India and all its trading partners, weighted for the trade that we have, what is the real rate of the rupee in a nutshell? So it is a good indicator of how competitive the rupee is vis-a-vis its trading partners, vis-a-vis the currency of its trading partners, right? Now, if you use that, and that's been historically a good measure to see where the rupee is.
Sorry to interrupt, but then you say more competitive, better for exports from India.
Absolutely. More competitiveness in the currency is you are more competitive insofar as exports are concerned vis-a-vis competing nations. Right? Now, if you were to look at that measure, and the RBI publishes that measure on a monthly basis, we are where we were in the lows of 2013, which is when we had our previous currency crisis. And the current level is around those levels, which means that it is seriously undervalued. Now, the more interesting thing is this. While all of us agonize on the fact that the rupee is being on a weak wicket, actually what you see is that a lot of regional currencies also have got impacted this year, right? But most interesting is the fact that while our rupee has been under pressure, the Chinese yuan has quietly strengthened against the dollar. So from being at 7.15 to 2, 7.15 to 7.2 a year ago, we are at about 6.8. Now, what does it mean? Is that while the rupee has depreciated against the dollar by about, I think 11% thereabouts, versus the yuan, we were actually down by about 18%. So that it just means that the export competitiveness of India is increased substantially. So I think that is a very important factor also, which is quietly playing in the background and can be a contributor to a better GDP kind of an outcome.